Okay, in this video I'm going to go over something which I see quite a lot, especially online in the trading community. I've already went over this in a blog post at decisivetrading.info. However, in a video I can go more in depth, and I can also show you on the charts and in graphs. So what I'm going to go over is basically I'm going to talk about traders who talk about the results in terms of how many points or pips they've made. So you might see them, and it's usually traders who are advertising their live trading room or trying to sell their training course. More often than not, in my opinion, it's traders who make their income off of the live trading room and the training courses rather than trading. So these traders will often say things like, had a great month, made 500 points this month, or made 1,000 points this month, 1,500 points this month, whatever. This is a completely irrelevant way of measuring your results. No professional trader is going to talk about the results like this because it's completely pointless. What I'm going to do is I'm going to first of all break down why it is not the correct way to talk about your results and why it doesn't matter to talk about how many points you've made. Then I'm going to go over how professional traders do analyze the results. I'm going to teach you how to look at those results, spot professional traders, and also, even if they are using the correct way to display results, I'm going to show you how to filter out traders who don't have a sustainable training method. So it's traders who are basically going to blow up their account at some point. So if you've watched any of my other videos, if you've read any of my blog posts, been on the Facebook page, you know that I trade the FTSE 100 on the 5-minute time frame. What I'm going to do is I'm just going to take a couple of large moves, what I consider large moves on the FTSE 100. You can see there's one right here. If we take it down, it's 35. Down to here, it's 40 points. And we've had a large move here. This one is 50 points. You can see the fall off here is going to be around about 50 points, probably a bit more, 60 points. So there's three moves in the FTSE, relatively large moves. You can say it's between sort of 40 and 60 points for a large move on the FTSE. So what I'm going to do now is bring up another chart. This is the Australian dollar, US dollar, still in the 5-minute time frame. We're going to take a couple of large moves on this. So we'll go from here all the way up. That's 30 points on the Australian dollar. We've had relatively large fall off here, 25 points. And we'll just try and find another one. So we've got another couple here. You can say this is a relatively large move. It's 25 points again. So for the Australian dollar, US dollar, between sort of 25 and 35 points is a large move. And the FTSE 100, we've already said, between 40 and 60 points. So if at the end of the week, let's say the end of the week, end of the week, I make a YouTube video. I say, oh, I've had a great week trading the FTSE. I've made 130 points. Now, let's say someone trading the Australian dollar, US dollar makes a video and says, I've had a great trading week. I've made 130 points. So similar result. However, it's more than likely that the person trading the Australian dollar, US dollar has had a much better week. Purely because the Australian dollar, US dollar makes smaller moves. So likely moves are going to return less amount of pips. Now also, if we look at a higher time frame, so Euro US dollar here, it's on a daily time frame. The higher the time frame, the more pips you're going to make per successful trade. So now let's take a move on the Euro US dollar daily time frame. It's a relatively large move there. That's almost 800 pips. We've got another couple here, 900 pips, and we've got one, let's just take it from here down, 900 pips again. So the person who trades the Euro US dollar, maybe at the end of the month, they'll say, great month, made 1,000 pips. They may have only ended the month up by one successful trade. What is also important on top of this, so first of all, that's showing you why it's irrelevant how many pips or points someone says they've made per month. It's completely determined by the market that you are trading. Every market and every time frame moves a different amount of points or pips. So on top of that, what is also very important is what is being risked per trade. So let's say someone is risking 10 to 15% on a trade. This is not a sustainable way to trade. A bad month is going to wipe out their account, and even a good month, let's say they end up the month 30%, they may have had enormous drawdowns. They may have had their account down by 60, 70%. They may have almost wiped their account out, and they've had a couple of big moves which has pushed them back up into profitability. If you're only listening to how many points they've made at the end of the month, it's covering over all the cracks basically. It's not showing you if this trader is a professional and if they have a sustainable trading method. What you need to look at is their return on investment. I'm going to talk you through return on investment charts after this part of the video. What I'm also going to do is I'm going to put up a return on investment for the last 30 days of my trading. The reason I'm going to use the last 30 days is because after TraderMan asked me to show some results about a month ago, I began posting them all on YouTube, so you'll be able to see that what I'm posting on my return on investment chart marries up with the results that I've posted onto YouTube. I'm also going to show you a couple of return on investment charts, some which will still end up for the month, but which display trading which is not sustainable and not something you should be interested in spending your money on, or definitely not somebody you should use as a sort of mentor. Okay, so I'm going to pause this video. I'll load in the other part of the video with the return on investments, and then I'll come back to you. Okay, so this is the return on investment chart for my previous month's results. So all it is, I just use Excel to make this. Return as a percentage is on this side. You can see 5%, 10%, 15%, 20%, 25%. This is a measure of the increase or decrease compared to the starting capital at the start of the month. Along the bottom, quite simply, is the dates. So we started here. You can see it's moving up in a slow, steady manner. There's no crazy spikes, crazy huge drops. It's moving up in a very steady, slow manner. End of the month, it was up 21.5%, which is, it's a very good result for the month. And what I'm also going to do is I'm going to chart another return on investment chart, which is still a completely acceptable chart, just because this month I didn't actually have, not this month, sorry, the last 1 month of trading, I didn't have any down days. So what I'm going to do is I'm going to load up another chart. I'm just going to alter the figures slightly. I'm going to show you more typical results where there are down days in the month, just to show you what it should look like. But you can see it's made 20% in the month, just over 20% in the month of trading. It's not jumping up, falling down, jumping up, falling down, and then it's taking a huge trade that jumps it back up in 20%. This would show you that it's not a steady trading plan. It's not a sustainable trading plan. Okay, so I'm going to need to pause the video each time I alter these charts because I need to alter all the figures on the Excel chart. And so I'm going to pause it. What I'm going to do is I'm just going to put in a couple of losses just so you can see them. And then I will come back to the video. Okay, so what I've done is I've put a few losses into this chart just so you can see what it would look like. You can see it's still increasing over the month steadily. It moves up. We're having stable drawdowns. They're not violent drawdowns. It's then pushing up. We're having another drawdown. We're pushing up again, another drawdown, and pushing up again. And this time it would have made just over 12% on the month. Still a very good return on your investment for the month. What is key is that, well, you can tell straight away from the losses, I'm not risking huge amounts of capital. I'm not risking 15%. It's not falling down by 15%. It's still increasing over time steadily, and the drawdowns are all sustainable in a long-term business plan trading system. Okay, so now what I'm going to do is I'm going to make another couple of charts, which would be Even if it's people that are saying they're making 500, 1,000 points per month, I'm going to show you why that does not mean they are sustainable methods, and it does not mean they are successful traders. Okay, so I've still got the 3 losses on the chart. All I've done is altered it slightly so that I'm risking a lot more per trade and my wins are slightly less. So you can see the chart moves up into 5%. We then have a loss, which is a huge fall off. It's it's actually about 4% fall off. It then pushes up. It gets back to the previous high. It then drops off again very largely. It pushes higher. It falls off again very largely. And then we have this enormous run up at the end. So we've almost made 10%. However, this is a lot less professional in its movements. We can see that we're risking a lot more. We're having very large drawdowns, and it's only the last trade of the month, the last couple of trades, which ramped it up. So any month when these trades don't come, we could have another loss. If we have another loss, we could end up with a down month. I'm going to show you one more chart, which will be a lot more extreme, and then hopefully you will have the understanding of why talking about how many pips you make per month is not enough. And you'll also be able to spot what proper trading, successful, sustainable trading looks like. Okay, so here we have the last chart. First thing you can see is it jumps around a lot more. What I'm going to say for this chart is we end up the month 3%. And the trader who is making his video, making his post, could quite rightly say that he ended the month up 500 points. He could say it was a very nice month. I made 500 points. I made 1,000 points this month. He wouldn't be lying. However, as you can see, the losing trades are enormous. You're dropping off down all the way down to minus 9% on your capital. You're then ramping all the way back up, having another huge fall off, pushing higher, falling off again, and then having an enormous winning trade right at the end. This trader is risking way too much of his account size per trade, and it's a recipe for disaster. Could quite easily wipe out his account, will almost definitely wipe out his account, will not be trading long term. However, he could advertise, she could advertise that they're having great months, making 500 points, 1,000 points, whatever. This is why it's very important to do your research, especially if you're going to put your money on the line, especially if you're going to start following a trader out there. This is your money you're talking about. And if you're looking at trading, I'm presuming it's because you either want to make a career out of it or because you want to build your pension pot, your savings fund, whatever. It's your money on the line, it's your hard-earned money. You need to do a lot of research. This is what you need to be seeing is return on investment. You want to see a steady return on investment, steady. Every trader is going to have down weeks, down months. So it's not that you're just looking for positive, but you're looking for steady moves. You're not looking to see in the process of 1 or 2 losing trades, the return on investment falling by 9-10%. The trader is risking way too much. No professional trader is going to do this. Although the wins are large, although we end the month up, what happens when probabilities comes along and you have a run of losing trades and you have a losing month? You're going to destroy your account. You're going to wipe out your account. It's not a professional way to trade. So hopefully that was helpful, guys. I believe I've covered everything that you need to spot this sort of thing now. And return on investment is the main thing you're looking at, coupled with what they're risking per trade. So as always, please do subscribe to Decisive Trading if you are learning how to trade. It's completely free, and I do try and post up at least a couple of trading videos every week. Okay guys, I'm James Orr, and I hope you have a great trading week.